Hey traders, Akil Stokes here of TradingPower.com and wanted to do sort of a midweek video just to review and recap what's been going on. Now, many of you have been joining me, Jason and I, for this week's Technical Trader Workshop. Actually, about 12, 1,300 of you. So you've probably been in the room. You've probably seen what happened today. But for those who haven't, we had a heck of a day. I mean, today was massive, and I'm not talking about trading. We had a very good day trading day, but the knowledge we've been going over has just been incredible. We started Monday with a nice soft introduction, and then between yesterday and today, we put in about another 10, 8 to 10 hours of just pure trading. And well, it's been intense. It's been intense, but the traders in the room have been doing a good job of following along, a good job of asking smart, educated questions, and well, I think they're getting it. I think they're getting it. As I mentioned a little earlier, today was our live trading day. Even though I mostly went over Fibonacci's and what Fibonacci tools I like to use and how to use them the right way. Uh, we were able to make some pretty good profits, and I want to go through some of the trades we took. Now you can see two of them that are still on deck right now. One is on the Euro New Zealand, which is actually a cipher pattern. Now you can see if I draw this in, X to A to B, B to C, with our C to D completion up here at 786. And again, if you're not familiar with ciphers, just make sure to join in this Friday. We're going to be going over how to trade and how to identify them. We got a cipher pattern. We rolled over. We got about looks like about 80 pips up, and now we've retraced the double top with some bearish divergence. So still waiting to get a rollover down to 58 flat, 58.03 for target 1, 57.22 for target 2. So we'll see how that plays off. Also, New Zealand dollar. We had an ABCD pattern here, and there's actually a lot more. At first, wanted to keep it simple during the room, just talk about a basic ABCD pattern. Show some examples of how to use our Fibonacci extension tool, giving us a 1414 extension down there. We'll get a 127, a little higher as well, if I bring this in. And also a Fibonacci inversion. But what I told traders in the room today, again, is once you get a chance to really know how to use structure, and especially how to draw these fibs in, that's when you can start looking for advanced patterns. And we actually have a butterfly pattern at completion as well, looking at X to A down here, A to B, coming to our 786, a B to C retracement, and then our CD coming right down. Let me see where our 127 is. Our CD coming right down, yep, right down to about 82.53. So you can see I actually entered a little later than that on a structure-based move down here. So just like Euro New Zealand, no idea if this trade is going to end up winning or losing. I'm actually going to move targets down a little bit, get right under the structure. But we're about 40 pips up at the moment. I can also roll stops up as well. And again, going back to our conversations on risk reward, look what I have now. 1, 2, 3 to 1 easily for my risk reward ratio. Lastly, let's talk about the two winners we had. We'll start with the small one. Had a very small one on Aussie dollar. And Aussie dollar worked right into the schedule because, well, we just finished talking about structure. I hammered the traders about structure all Tuesday and melted a lot of their brains, but got to show a good example of it. And I'll briefly recap what happened. We're talking about swing high to swing low, impulse leg, new structure low, and then our prediction was that we were going to retrace back into previous structure lows over here. So we're going to get a retracement into this level. So now that my predictions, and we threw some fibs and stuff in there too. I'm not going to go into big detail in this review, so I can try to keep it pretty short. But basically, I knew that there was a good chance the market would retrace back into this level. And the question was, how can I get involved? And what I did was, well, I simply watched the market bottom out. As we came down here, we put in a structure bottom, got a retracement, tested it once again. Boom, right there. Double bottom. Came back up, tested it again. That's 3 times we tested that level, and 3 times the market has held. And then finally, what do we get? Well, we get our break above, close above. We get our higher high, higher close, which we know from yesterday signals that this trend should make a push to the bullish side, should push upwards. So, what do we have again? Wait for it. Boom. Oh, I'm sorry, missed my entry. What do we do right here? Well, waited for the market, waited for the market to retrace back into a previous structure level. Again, giving me a really good risk reward because I know stops can go right below this structure, right about here. Targets can go at the level we talked about earlier, our prediction level. Boom, giving us a risk reward like this, easily a 2 to 1. Yep, easily a 2 to 1. And what happens? Well, boom. 2 bars later, get filled on target 1. Target 2 set at a retest of these structure highs. What do we eventually get after the room and the bonus question and answer close? Push, 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 push. Let me make this quick for you guys. Boom. Target 2's hit, giving us a nice simple trade. I think we got about 15 pips on target 1, about 35 pips on target 2. So nice 50 pips total from Aussie dollar. Not bad for a 5-minute chart. Lastly, let's take a look at Aussie yen. This one was actually a little bigger, and this was took this trade off a Gartley pattern. Again, drawing in our impulse leg or our anchor leg, X to A to B, B to C, and actually had a CD completion down here. And we use this as a, let me get this off of here. Use this as a great example of why we need to have stops in a safe place. You can see the market spiked all the way down, but because I use smart stop placement, didn't get stopped out. Almost did. Came probably about 5 pips away from getting stopped out. But before I can do so, market reversed, stayed disciplined, stayed patient, didn't get scared, didn't say, oh, it almost stopped me out. I should just take my money off now. Minus 20 pips is better than minus 40 pips. Oh, I know I'm doomed. The market spiked below this X leg. I'm wrong. If I get back to break even, I should just take all my money out. It's the safest thing to do. Unfortunately, I would disagree. Once you're in the trade, you got to stick with it. Unless you have a rule allowing you to get out, you got to stick with it. And that's what I did in this case. And what happened? Well, came up and hit, if I can remember where these are at, came up and hit target 1 for about 35 pips live in the room. And then trail targets got hit for about 60 pips. So looking at about 95 pips total on this trade. So you can see we had a very good day. We had a busy day of education. Held an hour bonus section for some Q&A. And, well, while all that was going on, also made about 150 pips, a little under 150 pips trading with about, with 2 positions still on right now. So again, just wanted to recap for you. And, well, if you haven't been joining us, you still have 2 days left of this free training workshop. Again, tomorrow is big. We're going to talk about trading psychology. We're going to have a guest speaker come in. It's going to be big and very exciting. We went heavy on the technicals Tuesday and Wednesday. So tomorrow we're going to take a step back and really talk about what matters most. What really makes or breaks you as a trader. Because again, really, the technicals are easy. You can learn these things. Doesn't take too long. The hard part and why you see most traders fail is the psychological part. So I'll see you guys tomorrow. I'll drop a link underneath this video if it's not there already on how you can watch the replayed sessions. And again, you can watch replay the sessions from Monday, Tuesday, and Wednesday. And I'll end with a little music and, well, just want to roll through a few of the great comments that we've been getting so far. So I'll see you bright and early tomorrow, traders. And as always, plan your trade, trade your plan.